The economic calendar is quite eventful today. Germany will publish GDP data for the third quarter, the UK will unveil the report on retail sales for October, and Eurostat will release euro area flash GDP data. Apart from the reports, Louis de Guindos, Vice President of the European Central Bank, will deliver a speech today. The news on Brexit is in the limelight again. Yesterday, the market held its breath in anticipation of Jerome Powell's speech. However, his speech turned out to be rather disappointing, especially for those who were waiting for hints about the probable key rate cut. Powell said that the regulator is likely to take a wait-and-see stance, which is surely bullish for the US dollar. Nevertheless, his speech did not produce any effect in the market, which resumed its quiet trade. Meanwhile, some fresh news about the US-China trade deal is circulating in the market. According to the Wall Street Journal, the trade negotiations between the United States and China have hit a snag over China's purchases of American agriculture products. Beijing is hesitant to make any promises. US Treasury yields decreased amid such news. During the Asian session, the greenback is losing ground against the yen due to the growing demand for safe haven assets. The US dollar sank by 0.07%, approaching the support level at 108.65. If it breaks this level, it will dip to the levels of 108.20 and 108.00. Today's news regarding the slowdown in the growth rate of the Japanese economy affected only the stock market indexes. The Nikkei fell by 0.69%. The Australian dollar, which reflects risk sentiment in the Asia-Pacific region, also indicates a lack of risk appetite. The AUD/USD pair fell slightly below the level of 4.68. A drop below will support the downward movement of the target levels at 0.6757 and below. In addition to risk aversion, the Australian dollar is weighed down by weak economic statistics. The data on the Australian labour market over the past months was unexpectedly disappointing. The number of employed people decreased by 19,000. Notably, the negative figure was recorded for the first time since September 2016. The unemployment rate in the country rose to 5.3% against the expected and previously recorded value of 5.2%. The Australian stock market managed to benefit from weak statistics. Traders are waiting for new economic stimulus measures, as the labour market is a barometer of the economic health of the country for the Reserve Bank of Australia. We continue to keep close tabs on market developments. Today, we are closely following the news on the trade conflict between Washington and Beijing. Stay tuned with us.